Welcome to T3 Live's Options Market Update. Matthew Buckley, call sign Whiz, the Chief Options Strategist here at T3 Live. And interesting move in the market today. We've been whipsawed around all week, but got a big smile on my face, and especially on the face of a lot of our weekly options traders who just joined us from the T3 Live side of the house. We have two trades on, or at least two of the trades that I got filled on, an SPX bull put spread and also a Twitter bull put spread. They're both currently up $2,400 in 2.5, let's just call it 3 days. That is a 25% return on risk. And hopefully if everything goes well on Thursday and Friday, we're going to see a total of about $4,000 in profit, and that's on about $10,000 in risk. And political science major here doing the math, it's about a 40% return in 1 week in our weekly options model portfolio. So folks, if there's any doubt, there's no doubt. I think we might be full, to be completely honest with you, but if you go to this page, t3live.com/weekly-options, and it's still up, there you go. If these order buttons are not grayed out, we still have a couple slots left, so, and we listened to you. A lot of you asked for multi-pay, and we gave it to you. So if you want to break your payments up into 4 payments, knock yourself out, but strongly recommend you get on board now before this closes out. And as you can see, 2 trades in 1 week could have potentially paid for 2 years of access into this incredibly, I call it fun, service. Okay, going around the world here, obviously airstrikes over Syria. Here we go again in the Middle East, really not impacting the market that much, or the VIX or the volatility index. Matter of fact, we're seeing a little bit of a rip your face off rally today with the Dow up 150 and the SPOO's up 15 points. Like I said, our SPX trade is up 50% week to date, and the Twitter trade is up 70% week to date. So this rally in the market's really helping out our weekly options trades. A little unsettling news out of China. They're thinking about getting rid of their Janet Yellen over there, their central bank chief. So that's going to be interesting. I think they're sending a signal that they're going to do whatever it takes, kind of to make things happen and make things right in China. And this was followed by about 2-3 weeks ago that Abe, Prime Minister Abe over in Japan, shook up his cabinet. Because he wasn't too happy with the economic results. So pretty interesting. I'm very long-term bullish on China, very long-term bullish on Japan for these reasons alone, that the governments are saying, hey, we're going to do whatever it takes to get airborne and make sure that we don't fly into the side of a mountain. Pretty interesting that nobody even talks about this anymore, do we? What Ukraine, right? The market only cares when it cares anymore, and the market doesn't care about this. So here's Putin rattling his saber again, saying, hey, you implement that agreement with the EU, and I'm coming after you. But the world doesn't care, so goodbye, Ukraine. This is a very interesting chart. So for all my, hey, it's not the Fed, the market's great, now everything's perfect, I want you to take a look at this chart. In the blue is the Fed's balance sheet, okay? Back to 2009. In the red is the S&P 500. Anybody see any correlation? And as the Fed's balance sheet has been wound down of late, anybody see what the S&P 500 is doing? Very, very interesting chart to take a look at. Apple taking a little bit on the chin today. Their most recent iOS has been a little bit of a train wreck, so they pulled that update, and hopefully, like me, you have a Samsung Galaxy S5 because you don't need an iPhone 6. However, since I do trade Apple, I obviously follow the news here, so that's another reason why the stock is getting hit there. Okay, I got to run. I have an accelerated retirement live training session this afternoon at 4 p.m. Eastern. So happy hunting. Make sure you hedge, and I'll be back with Thursday's market sit rep here at T3 Live. We'll see you.